I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So mixed markets around the world this Monday, with our futures a little bit soft. After last week, the signals pointed towards a down move, which we got when we hit the 50-day on Friday. So what do you think is next, Scott?
Well, you talk about making adjustments, and it all depends on your time frame. And as an intermediate term trader, which is what our sweet spot is, we try to measure and draw a roadmap of what could take place if certain situations took fold. And there were spots for adjustments, spots that we went over. And if you look at the chart of the SPX, you will see, remember this upper range that started to get built? This was when we broke back below 1698. This is when we said, oh, look at this. Maybe the bears have the ball, because we were talking about, in the spirit of preseason. Then we hovered below that area, so the bears protected it for a good 4 or 5 sessions. And then on Wednesday, we closed in the dead lows. So if you look a little bit closer here, you will see that was right on the 21-day. And within then, we were seeing some technical signals add up. So that spot was I think we even talked about saying, what do you think happens first, the 50-day or new highs? And we were leaning towards the 50-day, and there you go. So now I would say the measured move of this head and shoulders top pattern here basically came to fruition. So now the whole, I guess, next step for this week is what happens next. Do we get some kind of oversold bounce for a trade?
Well, in the spirit of the football analogies that we've been using, being as the Bulls have essentially had the ball for quite some time, would you say when we hit the 50-day, that was in fact essentially a touchdown for the Bears?
I would say it could have been a garbage time touchdown, but it was a touchdown, definitely. If you look here, so you want to go to the weekly chart, so maybe we talk about the whole 2013 season, and if you look, it's been a really strong trend and also an accelerated trend. So this was the last 2 weeks. So right there, I would say the Bears got 7 points, but the Bulls are probably winning 28-7. So the question is, can they rally up the score to make it a little bit more of a game, or do we stop and hold this 16-30, which would be maybe a 28-10, and then the Bulls get the ball back for the fourth quarter for what could be another blowout. So right now, I would say it's a start, and now we'll try and figure out if this trend line holds like it did right here, back on 628-ish.
So as we're looking for some kind of bounce, it might make sense to look for a red dog reversal. Show us how we could do that with the spiders.
We talk about a red dog reversal because it's a way that when people are saying for correction-wise that it could be 1987, it could be 2008-9 all over again. So you never know. So if you just try and buy something without a plan, you could be catching a falling knife. So when you're in a corrective phase, what I like to do is after a move lower and you want to test levels, you use this red dog reversal because it's a way to get involved and then also have a calculated stop just in case it's not the right spot. So then you could try it again and get a small paper cut. So if you look here at the spiders, you will see we drew this in Morning Call Express, where here is the same type of topping pattern you had in the spiders, okay? Where this is when it broke below. First spot was 170.35, and then we talked about this 169.85, which was right here. So now what you want to do is, I kind of drew this line here as if I was forecasting. This is Friday's low, 165.50. This is the only point of reference you have. Under that, then you have to go with support. Then you have to go with this 164.40 or even the 100-day. So what could take place here is if it pushes below 165.50, people get stopped out. Some people say, oh, I'm getting short here because this is not a real correction. We're going to crash, and we're going way lower. And then all of a sudden, you reverse, take back this pivot, and you get some kind of retracement. So this is your pivot. Below 165.50, really no reason to own the spiders. Below and then come back above, maybe you try a calculated trade versus today's low. It could take another few sessions, but overall, the oscillators right now are very oversold. We've only been this oversold like twice this year, and I think we're like minus 65. So with that being said, hard to be short, but it doesn't mean you could just, buy anything you see. You have to do it with the plan, and you have to make sure that there's relative strength there too.
Right. Well, so let's go ahead and check the temperature of the sectors following last week's volatility to see where they are right now. The industrials did show relative strength after last week's sell-off in the market, with the XLI still hovering around the 21-day.
Right, so if you think about it, the S&Ps went to the 50-day, the industrials are not there yet, so that's a spot for relative strength. So when corrections do happen, what you want to do is you want to see where the relative strength is, so when we turn back up, those groups usually move the fastest. And right now, if you take a quick look at the XLI, you will see here's the 50-day moving average. So it's above that when the spider's already there. So the industrials is a spot to look for some relative strength.
And the Russell did see a big gap down on Thursday, but still holding above its 50-day as well.
Yeah, this one had a very similar head and shoulders top pattern, and we've been watching this. And if you look here at the chart, you will see, you could have chosen this one too. Here's your left shoulder, your head, your right shoulder. Start to break below the 821 day. Not quite at the 50-day yet, but it'll probably be there today. See how it handles that spot, and then this is your longer-term trend line that the Russell's been holding all year. So, I would say it's kind of in no man's land where you had your meaty short here, and now the question is, where does it potentially stop for some type of bounce? And that's what we'll be figuring out this week.
How about retail, which had been showing relative strength in recent weeks with the RTH near highs, but dropped below the 50-day last week and hasn't been able to get back above it since?
Well, right now you have a big gap to the downside. I think some of those retail numbers were surprising. People weren't expecting it to be so weak. So with that said, it played catch up to the downside very quick. But it's too, had a big time support. And if you look real closely, you will see that you did have a sign here. Look at this engulfing bar. That is a huge engulfing bar. That is your sign to get out of the way, engulf this entire range. Okay, with that said, if you sold it there or got short there, you didn't mind this gap down. You had some downside follow through. So now it is below the 50-day, closed pretty weak. Here's your 100-day. So I would say at this point, just let it work its course out. If you want to look at a red dog reversal here, 53.43 is Friday's low. Maybe it comes below it, comes back above it, and then you'll see how long it stays below this gap. If it could fill it pretty quick, maybe not as bearish, but overall, this potent bar was what you needed to see in order to make adjustments.
And the banks were hit as well, with the XLF breaking below its 50-day, a key group to watch for clues about market direction.
Yes, and this I actually, when we weren't exactly sure what was happening last week, I think it was like Tuesday-ish, I'm like, there's a chance that if the banks could start to get some power, maybe the bulls get back in control.
Right.
And then I bought JP Morgan, Bank of America, and I got stopped out. So it just shows you that you could try things, but if you don't use a stop or you don't have a plan, you're going to get hurt more than you have to. And if you look here at the financials, you will see, this was right around here. It looked as if it was going to try and break above, and it failed. Okay, so you take a closer look here. You had this nice green red dog reversal right there, and then it failed. That's when I got out, and now you gap below it. It's at the 50-day. Not much traction here, and then here's the 100-day, and here's also a trend line. I think at some point, during this corrective phase in September, October, August, September, you're probably going to see a retest of this 1951. So if you want to do something tactical quickly, use the same thing, 1998, which was Friday's low. But ultimately, I think this is the spot that you'll see before having to put major money to work.
All right, and important to watch the home builders as well. The XHB bounced on Thursday to get back above the 200-day, but it's currently still sitting there.
Yeah, this was like kind of funny because this has been a group leading us lower, and then all of a sudden on Thursday it started to bounce pretty strong, and it gave you that day-and-a-half trade. And in a corrective phase, that's all I'm looking for really here. Day-and-a-half to maybe 2-day trades where you get a reversal, you get a little bit of follow-through, you put it on, you take it off, and then you figure it out. And that's what I did here with the home builders. Look at the XHP. This was a pretty potent bar into the 200-day, but overall, very weak considering this was one of the few groups that already went down to the 200-day. So that just shows you that it was oversold, but showing relative weakness. So if you would have bought it on this move when it went back above this low here of 29.83, then on Friday you had some follow through, and I remember tweeting saying I'm done with this day-and-a-half trade, and then it closed a little bit off the low. I mean the highs here. So at this point, I would see how it handles this. It's got to stay above just say 29.50 to show. Or I would say even 28.50 to show some kind of constructive commitment to this move. If not, it was just a bounce, and that'll help fuel the bearish case.
Yes, and as you mentioned, the home builders weren't the only group to hit the 200-day. Among the weakest sectors, the utilities had another sharp sell-off last week, bringing it back to retest the 200-day as well.
Yes, so both of these are the weaker groups, and the utilities also broke down well before many other sectors this year. And if you look here, because of rates going higher, remember the whole thing with rates, when people needing yield, that's why it was so strong in the beginning of the year. And then here was this head and shoulders top with the left shoulder, the head, the right shoulder, and so this is when this trend changed. You had a big move lower, a retest back up, and look at it where it retested, right into the neckline, and then right back here. So overall, the utilities has not been the place to be ever since breaking trend, and same thing with the home builders. They've been just more tactical, and they're both going to need more time.
All right, well, coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
This week, traders will likely gravitate towards some stocks that showed relative strength last week. One of those stocks being Apple, continuing to act well, especially after the Icahn Cooperman news.
Yeah, ever since that major decline almost a year ago from the 700 level, we've been trying to play areas that could be a little bit more sustained, and finally you're getting that now. If you look at the chart of Apple, you will see, remember up here when it broke the 50-day and the 21-day, this was a spot, 650 to get out of some. This trend line got broken, another spot to get out of some. This is when it traded below the 200-day, couldn't reclaim it, a spot to get out of some. And then, we've had some tradable bounces the entire way. And then finally, we had a nice spirited bounce that was very technical since earnings. Here's your gap up on earnings, 3-day consolidation. Here's where you could have added when it set in motion above the downtrend. You had a quick move up. This is when they sent out their invitation. So I think that's when I I got back into my little swing trade. This is when they took back the 200-day, and then here was Carlin Cooperman, boom. So now you're flagging higher. I would say if it gets above 504 and a quarter and stays above it, there's no reason why we can't see 520 to 540, probably heading into what will be, that event on September 10th.
And sticking with high beta tech, Netflix continued to meet buyers at the 21-day, was able to close well off the lows on Friday. So will this be on your radar for continuation today?
Yeah, Netflix seems like every time it's about to break down, it holds where it has to. And then it did show relative strength on Friday. So today or tomorrow, if the market wants to bounce, maybe this is a candidate. You look at the chart. Here's this trend line that's been intact. Here's the more elevated trend line, which it's been holding the 21-day. So I would say if you want to take a closer look here, there's a little 2-day range. If it's negative today and we go positive, perhaps you could be a buyer above this 260.50, and then you have this little peak here, and then look how close we are to 2013 highs. This stock is showing a lot of relative strength.
And LinkedIn found some buyers at the 21-day as well on Friday, so this is the level then to watch today?
Well, it's a new point of reference. With the market getting so pressured, it's hard for even the best in breed to hold these huge earnings gaps. And if you look here at LinkedIn, you will see that it just needs time. Let's go real quickly to the weekly chart just so you can see the bullish formation that we've had here in LinkedIn, which was this big cup and handle pattern that we talked many times about last year. Here's when it triggered, and then you almost have another channel here that went sideways and triggered again. So I would say if you look at the weekly, people are like, oh my goodness, look at the size of that candle. But I think it just means, it needs a little bit of a rest. So you go back to the daily. It did reverse on Friday after holding the 21-day. So here's where I would trade it against. I wouldn't do too much with this just because of the way the market is. But overall, it did hold a big portion of the earnings gap showing strength. It almost closed near the highs. I guess if it were to cross back above this little pivot, it could go more into the upper end of this new channel. But I do think this channel that you could probably draw your lines like this will have to go sideways and absorb this recent move as the market tries to figure out where its bottom might happen.
And we've talked a lot about the weakness in Google, and the stock continued to show relative weakness last week, breaking below the 100-day on Thursday and struggled to regain that on Friday. So would you say you're just avoiding this one?
I have been for about a week and a half ever since that outside day. And people are like, Red Dog, why is Google so weak? I'm like, I don't know. You know, the earnings weren't spectacular after it being priced for perfection. And then really, last time I traded it was right around here when it looked as if it was going to break out of this flag formation, but this gave me an outside day where it traded above this, 906, 907, and then closed below it. So that's when I'm like, all right, needs more time. Some guys even got short when it broke this trend line, and now it's already below the 100-day. So this has been relatively weak. Moving averages are curling down. I guess you could look towards it into this area for some type of bounce, which is about 847. But at this point, it's just been out of favor until you see something really change, like maybe like an outside day like this or something, which I don't know what it could be. I would just avoid it. And if you've been shorted, I wouldn't go back to the well too much and probably cover some, as this has been a nice move to the downside. I would say if we do get some kind of long, maybe a long verse, again, this 847-ish, and then the 200 days all the way down here to 811. So just be careful here with Google. It showed some signs of a complexion change in the past few weeks.
All right, let's do some quick hits here and talk Tesla first. Holding where it had to at the end of last week, showing some commitment. Would you say this is your A list, your A minus list, B plus? What would you say?
I'd say it's on my A minus, just because the real setup was on Thursday when, after a move from the earnings gap all the way into the 21-day, then it showed relative strength when the market was really weak. And we talked about that. A lot of guys on the VTF made decent money there because it all lined up, where you had a strong stock after a strong pullback to a place where it's held into a down tape, and it wound up being decent. You look here now, it's trying to form another little wedge type pattern. Like this was the last time it happened through the 21-day. This was extreme because of what Goldman said. So here was, your red dog reversal here around 107.30, came back up, and then it needed like 4 or 5 sessions to digest before going. So here is that gap up after earnings. Didn't have enough strength to hold it. Came into the 21-day. Held it, and now you have like this little 3-day pivot. So I would say I'd love to see it hold below it, and then we could get some type of trade if it were to cross above this, which is about 144, 145. And I don't think it's going to be off to the races, but I do think there'll be a trade there that a lot of people are still trying to short this thing, and it's still acting better. Until we get a decisive close below the 21-day and it stays below it for multiple days, I still think this is a strong stock.
And Facebook continuing to act well, showing relative strength on Friday, saw a big gap up and held above it. So perhaps flashing us some signals that we could see higher prices in the coming sessions.
And I've been talking about how even now, because I know 3-4 months ago, I'm like, the highs of the year aren't in, everyone argued with me. Now I think there's a little less arguments, it's just a question on when. So you look here at Facebook, there was an upper pennant here that resolved to the downside, got some guys out of it like me. Now lately I've been just trading it. Here's your new point of reference. You have 3602. If it were to start getting above this little area, okay, perhaps you could buy more, and that right there is about 37.55. And I think you could just extend this little range here, to let it absorb what could be then a move north of 40 in the fourth quarter. You look at the weekly chart here too. We try and show you cup and handle patterns, and this is gorgeous. Look at this huge cup, descending channel, ignited on earnings. Now it's just going sideways, and the question is, how much sideways action does it need before trading back above this 39.32?
And gold was a standout last week. I know you're trying to play that a few times. How does it look now?
It looks like it's had a nice move, and the question is, how much commitment do you want to have to it? For me, I'm not a gold bull, I'm a gold trader at times. And if you look here, you'll see that it did have that blood in the street lows right around here. All right, and that red dog reversal. Look at this red dog reversal, just so you guys know. Traded below 115.65 to the low of 114.68. So you could have bought it here with $1 risk and said, I will hold this thing as long as it doesn't break this low. And if you did that, look at the size move. So for $1 risk, you're now up 15 points as a swing trader if that's how you do it. If not, and you just did it for a day and a half trade, there you go. And then you could have maneuvered it many times. I started to get back involved right around here. That gave me a nice tactical cash flow trade, and now I'm just going to, let it reset up again. This has been a really nice move, and hopefully some of you guys caught it, because if you follow me on the VTF, you will have seen my entries and exits there, and that's what you want to do. A lot of people are like, what's the VTF? Our virtual trading floor is a spot where people could watch us put on our positions and take them off, as we've talked about in a lot of our other outlets like Twitter, Facebook, morning call. So the virtual trade floor is a great spot to connect the dots. I don't always have enough thumbs to tweet everything.
Well, while you're at it, why don't you connect the dots for us with silver, which also acted well on Friday?
Yeah, silver very strong also. If you look here at the chart, this was when we talked about it being a better buy below 18 versus sell. Look at the size of that igniting candle. This too, if you bought on here and said, I'm not going to sell it unless it breaks the low, congratulations with a huge move. If not, and you traded it, here was a spot that it broke this descending channel. Then it had a gap up and held it really nicely. And look where we are now. So ultimately, it still looks good, but, it's had a really nice move, so I think the meat of it's over. Now I think most guys are going to maybe let the market bounce, and if that's the case, maybe gold and silver come in, and you could see a better buy into this 21.5 area.
Well, it'll be a quiet day today on the economics events front, but we will have a couple retail earnings trickling in. What will you be watching today?
Well, you have some retail earnings trickling in. You have Wednesday. I think we have the minutes from the Fed, which traders are turning towards. And ultimately, we're trying to figure out, what type of bounce could we have. Markets could stay overbought for a while, which we saw, and they could also stay oversold. So again, that's why I feel like we're going to be using this red dog tactical plan in certain stocks and certain sectors, even with the spiders, because again, you're trading it with a plan. And I wouldn't try and do too much with it, too much size, but if you're at work and you want something to do, I think now is a tricky time to be short. The time to be short was last week, and it's also not going to be just, close your eyes and buy. It's going to be very selective as a lot of people are on vacation and the trading is going to be thin.
All right, that's your morning call for this Monday. Happy trading, everyone. Have a great day.